Welcome back. Well, the gift review is suggesting we're going to see a bit of a downtick, but can we end the day higher than what we start off from? Well, that's going to be the big question today. So let's see how that goes. Prakash Diwan joins us to help us out with some analysis on all those numbers that came over the weekend. Hi, Prakash. Good morning. Hope you had a good weekend. Let's get straight to the top number, which is a big mover for the Nifty Bank as well as for the Nifty. ICICI Bank. A couple of positives in there on asset quality margins as well. The problem was that growth is slowing down, credit growth as well as deposit growth. How would you rate these numbers?
Good morning, Nigel. Thank you. Thank you for having me on the show. No, I think the numbers are very interestingly positive. I mean, it depends on what is it that you went into these earnings with in terms of expectation. But look at what's not led to credit growth, and that's the retail portfolio. And at some point in time, given the weakness in quality of retail loan assets, you would actually be thankful that it's not grown and led any kind of a diminishing impact on the quality of the book. The other interesting part is this is one more quarter where they managed to do that 2.36 zone of the ROA, which is commendable for a book of this size. My sense is, as compared to other banks, largest banks, you can't compare the smaller ones which are yet to come, and some of them have come. ICICI numbers are best in class for sure, at least in this quarter, which means that there will be more money allocated to it. So I'm quite positive the market will like it. It's just a matter of them gearing up for credit growth as and when they feel the right opportunities will come, which could be probably post the last quarter of this financial year. But very positive numbers according to me.
Okay, so good to start with positive for sure, Prakash. Hi, morning. Now, I want to talk to you about, say, stocks like Credit Access, or let's throw in a Godrej Consumer as well. Numbers are bad. We all know that. Credit Access is a howler. There's a loss. No point going over the obvious, right? And similarly, for Godrej Consumer, margins are under pressure. Raw material costs are high. Sales growth is not really happening. The question is, how much of it is in the price? Now, for both of these stocks, would you be a brave heart and buy on dips, or do you think it's best to stay away for now?
Good morning, Surbhi. So I think MFI is absolutely a big no. There is no reason to catch a falling knife, and the entire sector is going through a lot of systemic issues. So it's not just restricted to Credit Access. It's a good run business, well-run business, but you'd have to wait for the sector to start improving. On Godrej Consumer, I think they've indicated the weakness in their commentary earlier. There's nothing new that should surprise us. And till I think the budget comes up with something which ends up having a percolating downstream impact on demand revival, I don't see any reason why the FMCG names will start sparkling at this moment. But there could be an allocation which will start coming to these once FI money comes back, and it's anybody's guess when that happens. But in the meanwhile, the demand, the consumption pattern could probably start improving favorably, and that's when you look at it. So again, it's a no for GCPL as well.
Okay, let's talk about some more stocks that we have to focus on. And JSW Steel, of course, is a shining light in an otherwise rather dull morning. So let's discuss this one. Prakash, so Nigel's been telling us all the internals which are looking actually better than anticipated. But there is an overarching weakness. I mean, this morning we got China data, which is not looking too good. So maybe metals could start lower. But, all things give and take, plus the fact that there is some hope expected on the safeguard duty piece. How would you look at a name like JSW Steel?
Yeah, so, what the numbers tell, the story that comes out is very simple, that they managed to, though the price reduction in realizations was not as bad as what was anticipated, it just tells you that some of the quality players will be able to manage their contracts well, the geographies that they sell to, segments that they specialize in, and manage the advantage of the lower coking coal costs as well. Now, this whole scenario could continue to play out even in the current quarter and maybe another quarter. What will change the trajectory is not just the duty announcement, which probably is likely in the budget or maybe beyond that, but is the demand resurrection. If that happens, and a lot depends on what the US is wanting to do with its own growth areas. If that happens, globally, it will set a very virtuous trend for ferrous at least. So I'm quite positive things will happen, but in test your patience. Interestingly, within the ferrous space, for me, JSW stands out as a very efficient player because of its scale and, as they kind of keep rolling out some of the newer facilities. And the subsidiaries have done well. I mean, the new acquisitions have also kind of started plugging in. So all in all, looks like you could probably have a buyout dips kind of a thing, but the numbers aren't as bad in as Nigel rightly said, in a difficult quarter.
Okay, Prakash, morning. Prashant here.
Yeah.
Let's do a rapid fire. Because lots of names to address. Religare, what's the call? This mystery open offer has been made. That's not, the open offer is not mystery, but the person behind it is a bit of a mystery. I don't know if you saw, but yeah.
Yeah, I did.
Good for the price, I guess. 250. The Burmans were at 235. This is higher. Go on.
But too late in the day, I guess, because the open offer would have kicked in from today, if I'm not mistaken. So you can't be making an offer just, on the eve of the start of the valid open offer. You could have done it much earlier. So I don't think it has much of this. It's just probably, some issues, corporate rivalries that keep happening. You don't even know who this guy represents and all of that. So I think it'll probably be no news in a couple of days.
Okay. IDFC first.
It's still an avoid. They keep trying to do a lot to chug along. There's great strength, potential, everything, but I don't think the market's going to be in a great mood. When especially you have even a small bank like DCB's posted some good numbers. PSU banks, BOI, very decent numbers. So this is a season where you don't reward any weakness.
Yeah, IDFC first, by the way, just pre-open has started. It's ticked down 11%, 12%. DLF, Prakash.
Yeah, so I think, again, great sales value, but where is the inventory to continue growing at this rate? So I think peak performance is already priced in. People are forgetting the fact that if DLF has to sell these 30, 40 crore kind of units, they'll need to build as well. And there's not much available real estate assets that they could rely on. The cost of acquisition is not the same as what they are now building on. So I think it's past its prime. Though there could be some sort of upside, you can't time the peak, but I wouldn't look at it. Though the numbers are very encouraging, everything's fine. Time to probably book out at these astronomical levels.
Two initiations also. There's Vishal Megamart. We should just look at the price. And there is this company called IGI. They do lab-grown diamond certification. It's recent listing. So two new initiations there as well. You have your view on any of these?
IGI, I really like that business. It's a very less understood kind of a area. We've never had something like this because LGD itself is a very new presence of sorts in our cognition and in our consideration. But I think IGI, if understood well, will probably become a. So it's like the rating agencies business when it started. Nobody thought CRISIL could grow so much, or a CDSL, or all of these support services which really make a lot of sense in terms of growth trajectory. So picks and shovels kind of a story. Don't go after LGD, go after the guy who certifies it. LGD.
Okay, fair enough, because irrespective, the guys who are certifying and asking for a fees for it, they'll continue making money given the demand. Got that.
Okay, let's ask Prakash about a couple of other stocks. Prakash, in pre-open, we have DAM Capital that's up close to around 8%. Now, in December, we saw the stock list. It had multiple times subscription. The stock went up, I think, 40-50%. And from there, it came below the IPO price. It came out with a set of numbers. Any view on DAM Capital?
So I think I haven't looked at DAM Capital specifically, to be honest, but the space is very promising. Remember, there's a lot of activity in terms of IPO, issuance, OFS, QIB, you have, whatever you have. So there's no reason why some of these marquee, well-placed intermediaries won't make money. It's good time for the plays in the capital markets of this variety at least, and not just broking. So I'm quite positive, and I'm sure the numbers will kind of continue to improve from here on. And they're smart promoters; they know what market would like. Things probably will be very well aligned in that sense. So it can probably be continuing to reward investors. But I don't have a view in terms of numbers, in terms of what expectation you could build on here on.